In the past 5 days, the stock market went up and down quite a lot. And of course, that is driven by some major companies presenting their earnings. And today I want to discuss three of them and show you the highlights of their earnings. After that, I will show you my price target for these three stocks. I'm very excited to see what you guys think about these stocks, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Starbucks presented earnings earlier this week and it is looking pretty interesting. The stock went up about 9% and as of recording this video the stock went down again about 8%. Diving into the results, we see that revenue was reported at 9.1 billion, down 1% year over year, but up 6% quarter over quarter, which is very important to me. EPS was reported at $0.93 per share, down 6% year over year. On top of that, global comparable sales declined 3%, driven by a 5% decline in comparable transaction. There was a 2% increase in average ticket, which is the silver lining here. And to me, comparable sales is a really important number with companies like Starbucks. They can easily open new stores, but you want the existing stores to grow as well. So this decline is worrying me a little bit. Starbucks opened 526 new stores in the third quarter, bringing the total to a shy 39.5k stores globally. Diving into these segments, we see that North America took a big hit in transactions, down 6% year over year. Change in ticket is also slowing down year over year. And Starbucks was able to add new stores here year over year. This number increased 3%, but revenue was up only 1% and operating margin decreased 70 bps. Again, not looking good. The international segment is down 7% in comparable store sales, both caused by transactions and tickets. Well, last year this was increasing big time, so this doesn't look good to me. Store count increased 8%, but revenue is down 7%, and operating income is down 23%. So Starbucks is really bleeding here. Operating income decreased 340 bps. And China made a huge impact in this segment, with a 14% decline in comparable store sales. So that's definitely something to keep your eye on. The channel development segment looks pretty good, with a small decline in revenue, but a heavy increase in operating income and operating margin. And now it is time for the price targets. I'm using the Evergreen Money software to come up with 3 price targets based on the assumptions I fill in. We have a low price target of $53 to $58, a mid price target of $66 to $73, and a high price target of $83 to $90. And to me, the high price target is the most justified here. Starbucks is facing some problems, don't get me wrong, but they are the strongest and most recognized coffee brand in the world that is still capable of growing in different areas. So I'm feeling confident in Starbucks hitting that high price target. Next on the list is Microsoft. And Microsoft presented earnings earlier this week, and it was looking pretty interesting. The stock went down 7%, but seemed to recover pretty quickly. Revenue was reported at 64.7 billion, an increase of 15% year over year. And keep in mind, Microsoft is one of the biggest companies in the world, and they are still capable of increasing their revenue at a really high pace. Operating income was reported at 27.9 billion, also up 15% year over year. Net income and EPS were up 10%, also looking pretty good. Looking at the individual segments, we see that Microsoft Cloud is up 21%, which is really insane. Azure is up 29%, but there are also some areas where growth is lagging, such as Office consumer products and Windows. For the upcoming quarter, it is expected that Microsoft will report a revenue of 63.8 billion on the low range. And this is lower than the previous quarter, where they reported 64.7 billion. But it is up year over year from 56 billion. So to me, this looks pretty good. Azuri is expected to grow in range of 28 to 29%, which is pretty insane if you ask me. It is expected that operating expenses will grow single digit and operating income will grow double digits. Looking pretty good if you ask me. For the price targets, I'm again using the Everything Money software with the three assumptions. We have a low price target of $236 to $275, a mid price target of $323 to $372, and a high price target of $438 to $500. And to me, the high price target could be justified here. We got a quality business here that's one of the biggest in the world, and it is still capable of growing 10 to 20% each year in revenue. Bottom line margins are also increasing, which is also very nice. So, which price target do you think is the most justified? Last company on the list is Visa. Visa reported earnings on the 23rd of July. The stock went down 5%, but recovered rather quickly. And Visa reported a revenue of 8.9 billion, up 10% year over year. Net income was reported at 4.9 billion, up 17% year over year. So margins are increasing drastically here, which is something that I really like. Earnings per share increased 20%, also looking really impressive. And key business drivers were the 7% increase in payment volume, but also cross-border volume and processed transactions. The interesting thing is that the payment volume is decreasing in the US most recently, and also the transactions growth. In Europe, we see more or less the same thing happening. For the upcoming quarter and full year, Visa expect low double-digit growth in revenue, in line with previous quarters. Operating expenses growth is expected to be an increase at high single digits, and EPS is expected to increase double digits as well. Now it is time to check the three price targets for Visa, using the Everything Money software. We have a low price target of $192, a mid price target of $250, and a high price target of $326 per share. To me, the mid to high price target is the most justified here, indicating the stock could be undervalued. And in my opinion, they are. Visa is the world's biggest payment processor and is capable of growing 10% each year, minimum, and also increasing their margins significantly. So which price target do you think is the most justified here? And this was the full video on the three stocks that presented their earnings, and all three of them are a buy at current prices in my opinion. What do you think about these three stocks? Let me know in the comments down below. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.